Hello, good morning, guys, and welcome to your market report. I'm glad to have you guys here. Now, listen, today is Friday, June 1st, 2018. Let's start the charts right here. The first thing we're going to look at silver price and get right on it. $16.39. It's right now it's in the mid, still, like I say, in the middle of its range, the lower range. It's been running in this for the longest time. Now the gold was showing strength. It made it up above 1300. I think it's back down below 1300 right now. But this is very the situation in Europe and with Deutsche Bank is very tenuous right now. We're going to have to keep our eye right on. I'm going to keep my eye on it real close. Now, the next thing we're going to look at is Bitstamp and the Bitcoin price. 74.11 as of this morning at Bitstamp, and it's trying to stay above up into the 7,000s. It's having a hard time, to tell you the truth. Let's go to the 15-minute chart here. Boom. You see these big red candle we had this morning? It took us from 75.43 all the way down to 73.51. Not long ago, just a few minutes ago. Let's go to the 1 minute and we can see when that happened. Here it is right here. Okay, so it was back around what time was that? 8:52, 8:51, 8:52 this morning. Big red candle down. Big red candle down. It bottomed out at 73.48, and it's been staying down on this. It's starting to dip. It's starting to look like it's dipping a little bit right now again. Cryptocurrency market capitalizations. Everything's in the red, obviously, because it had that big red candle. Except for IOTA, which is up 5.82% at $1.83. EOS is 1206. Litecoin's 117 bucks a piece. Ripple, 61 cents. Ethereum, $573. Let's see what we see for bargains. Who's down a lot today? Tron has got a bargain day on Tron right now. It's down 4.56%, and its price is 5 cents, 5.58118, 0.58118. So it's almost 6 cents, 5.8 cents for Tron right now. Okay, so let's move on to the Dow Jones right now. She's up 224 points on the day. This is a rally, I guess, over the jobs report, but I don't really believe that's what's rallying it. What's rallying it was that dip in the bond prices and bond yields. It's reacting now to that dip in the bond yields. Now, it was going to react earlier, but what happened was we had the troubles in Europe, and that is exacerbated that troubles in Europe pushed it down, so now it's recoiling like a recoiled spring because of good news from the jobs report is part of it, but also the fact that I lost my train of thought. I just had a brain fart. Anyway, we're seeing it at 223 points up on the day. Now, she's got a ceiling where she's going to meet resistance up around 26,000 if it gets that high. I don't think it's going to get that high. And also, it's got support down around 23,000. So the market's still floating in that range. We're not in a market crash right now. We're not going to hit the market crash situation until the U.S. 10-year gets over 3.25%. And I've said this all along. Now, how long is it going to take to get to 3.25%? We've had a tremendous amount of bond buyers coming in that have supported it and kept it from getting to 3.25% as quickly as I thought it would, simply put. So it's going to take a little bit longer to get there. But we're going to get there, trust me, because the Fed's going to keep upping the ante until we do get there. So now let's move on to oil prices. 66.26 for Sweet Light crude oil futures. It's down 1.16%, and it's down 78 cents on the day. So what we see here is we see the lead up to a high in price of 72.48 on the 21st of last month. And ever since then, it's been dropping off a cliff. We're seeing a rather steep price correction in oil. She's back down Sweet Light crude to 66.26. Will it continue to keep dropping? We're going to have to wait and see. Okay, so now let's move on to bonds and rates. Now, what we have here is we have all of the bond yields going up today. We're looking at U.S. 10-year at 2.91%. It's starting to creep back up to 3%. Now, I'll tell you what I think is going to happen with the U.S. 10-year. I think for the rest of this month, the next 30 days, we're going to see it stay somewhere around 3%. Somewhere in that range. Maybe 2.93 or 3.05 or something like that for the next 30 days. At the end of 30 days, I think we're going to see the bond yields start to climb again, and they're going to start to go on their way towards 3.25%, because the Fed's going to raise the ante $10 billion more. I think they're at 30 billion right now, and I think they're going to raise it to 40, if I'm not mistaken, at the end of this month, in 30 more days. That's going to have an effect on the treasuries. Sooner or later, these buyers on the treasuries their pockets are not going to be so deep, because the Fed right now is withdrawing liquidity from the markets. Once their pockets, and let's face it, the only way they're going to keep this game going is if they got $4.5 trillion in their pockets. Now, do you think these guys get $4.5 trillion? Because that's what the Fed's got in bonds to sell, you know. And sooner or later, we're going to run out of buyers, and the Fed's the buyer of the last resort. And so what's going to happen is when we run out of buyers and this game is over, and the bond yields spike, the markets are going to come down tremendously, and what's going to happen is then the Fed is going to have to become the buyer of last resort again. No choice. No choice. They're going to have to buy back everything that they've sold and more, and lower interest rates back down. They got no choice. This game that they're playing has got a conclusion to it, and the conclusion to it is hyperinflation. Okay, so now let's move on to the U.S. dollar index right now. The U.S. dollar index is at 94.15. I think that that the dollar index is going to taper back a little bit. The dollar is going to lose a little bit of strength, but ultimately, when the crash starts and the crash really gets going, I see a 96 on the U.S. dollar index or higher. I see it going to 96 or higher when the crash gets really going. Then later, after the crash ends, that's when we're going to lose the dollar. Is when the Fed has to relent. We're playing a game. Did you ever see two young boys playing a game where they call it uncle, and one kid grabs the other kid by the head and he gives him what's called a noogie? He starts to rub his head like this, right? Until he says uncle? That's what's going on here. The Fed's going to have to say uncle in the end. But how long is it going to take before the Fed says uncle? How low is the market going to have to go? How far are we going to have to go into deflation before the Fed's going to say uncle? Now, this first tremor in the markets occurred back at the start of the year, back a few months ago. The markets fell off precipitously. Let's take a look at it real quick. Okay, let's go back, and the Dow Jones back to, say, a year charts. Okay, let's open this up. Okay, here it was right here. This initial fall in the market. It fell from a high of 26,616, boom, all the way down to 23,860, and it scared the bejesus out of the Fed. But they held their ground. They didn't say uncle. They did not say uncle. They held their ground. And what they did was is they came back in right here, and see this spike upwards? This was backdoor monetary stimulus done by the central bankers to support the market. And then once they got the market supported, then they pulled it away, and it dropped back a little bit, but it started bouncing along. We've been bottom bouncing. We've been bouncing along ever since. What's happening is the pressure that caused this huge spike right here, downwards in the markets, is growing to cause another huge spike downwards in the markets. And this next spike is going to be a much larger spike downwards in the markets. I'll call it a deflationary spike event. And it's coming. I don't see the markets getting over this peak right here. They're never going to make this high here again at 26.6. They're going to have a problem getting up to passing 26,000. Once they get up 26,000, I don't see them climbing past that in the short term. But then what's going to happen is the Fed is really putting the pressure on now. They're thinking they're getting away with it because the markets are bouncing along relatively stable. And so the Fed's thinking to themselves, hey, you know what? We're getting away with this crap. I mean, we're getting away with it. Yeah, we're selling our balance book. Yeah, let's keep going with it. See how far we can go, you know? And they're not going to stop until the markets give them the hard noogie and make them say, uncle. Okay, so let's move on a little bit here. Let's see, let's take a look at Deutsche Bank this morning and see what they're doing. What we see here with Deutsche Bank is it went down to a low of 9.12 euros on Thursday, yesterday, at 1700 hours. And that was the bottom, right? And what we see is a lot of these guys come in and they've started to buy. Fools. They're buying Deutsche Bank. And they brought it back up to 9.48 euros or 9.50 euros. And 9.5 euros a share on this. And they brought it back up. And the thing is they think, now their thinking is logical, the guys that are buying this. They're thinking to themselves, that Deutsche Bank's going to, if it does go under, it's going to get a bailout. And they're thinking that they're going to see a move like we had. If we go back to the 5-year chart and we take a look, it made this bottom down here of 9.85. People bought in, right? And it went all the way back up to 17 euro and 17.18 euros. And those people made money. They basically essentially doubled their money. They bought in here at 9.85, and it went all the way up to 17 point something. And so they made a lot of money, those people. So these guys now are thinking, hey, you know what? Wash, rinse, repeat. That's what they're thinking right now, and they're buying in. But what they don't realize is what Deutsche Bank had a few cards up its sleeve. They had a few moves that they could make when this happened last time. And they had support from some buyers. I think it was Qatar or something like that. They had Arab buyers coming in and giving them support, which drove the price back up. But this time around, this is a totally different ball game. They can't dilute their stock and their shares anymore like they did last time. They diluted their shares. They cut employees. They cut corners here, cut off, and they had businesses that they could sell and everything else back then. This is a different world this time. Deutsche Bank now is sold off almost everything. They've been stripping up the floorboards and throwing them into the stove to stay warm. For the last little while, and now they're cutting right down to the bottom of the barrel, and there's nothing left to restore them, and there's nobody out there to save them. So these guys that are buying in this time, thinking it's going to be like last time, all over again, you know, these guys right in here are buying the dip, and they've brought it up to here, you know, and it's still rising a little bit. That's because of the enthusiasm of these buyers. They're basically pumping it. They're pumping it with their own money. They're not going to go that far. They might get it up to 12 right now, and they're going to try to, once they start to try to pull out, they're going to try to pull out ahead of the other guys and make some profit. They're going to start profit taking on it, probably around 12. You know, and they're like a bunch of sharks, you know, these guys that are buying in right now. And this is where it's going. It might bounce up to 11 or 12, and then it's going to start dropping down. Next time it drops, probably going to drop down to 7. But we're on this slippery slide to hell. Don't buy into Deutsche Bank. It's too risky. You could make a little bit of profit if you're playing with these pump and dump guys. But these pump and dump guys, you know, I mean, you're going to have to be just as expert as they are, and they're a bunch of sharks. They're a bunch of real traders, you know. But they're buying in, thinking that they're going to get a bargain, and that's what they are. They're sharks swimming in for a kill. The water's full of chum, and they're coming in for it. So anyway, listen, I've rambled on about Deutsche Bank enough. Deutsche Bank is going to take a little bit longer before she sinks. Right now, she's listing. If she's a ship, she's out on the ocean, she's listing, and the water's rushing in, she's gurgling, and everybody's saying she's sinking. And yes, she is sinking, but you'd be surprised how much longer. And like the Titanic, it took like 4 hours. Even after she started to list, it took like 2 more hours. You know, and that's the way with Deutsche Bank. And she's going though, guys. So thank you guys for listening. Like and subscribe, and we'll catch you in the next episode. Bye-bye.